Hello, I'm Rob Westervelt, Editor-in-Chief of Chemical Week, here at the IHS World Petrochemical Conference in Houston. And I'm joined now by Nariman Behravesh, IHS Chief Economist. Nariman, thank you for joining us.
Thank you.
I guess we'll start with a question about the global economy. Give us your view on what's the state of the global economy today. What are you seeing out there?
Well, I think it's fair to say we're not out of the woods yet. There's still some significant risks, but there are also some bright spots. I mean, to begin with, a lot of bad things didn't happen last year. We didn't go off the fiscal cliff in the U.S. Europe didn't have a meltdown. China didn't have a hard landing. So all that's good. But more importantly, there's some other good news, as it were. U.S. economy, the private economy seems to be doing fairly well, despite what's going on in Washington. Parts of Europe are growing. We tend to get very doomy and gloomy about Europe. Actually, parts northern sort of economies, big economies like Germany's growing. China's growth has stabilized at around, say, 7.5%. It's not growing that rapidly yet, but it's no hard landing, certainly. Japan, very importantly, turning around. It's had 3 recessions in 5 years. It's coming out of this 3rd recession. A lot of stimulus from the new government of Shinzo Abe. And then very importantly, the emerging world, Africa in particular, growing very strongly. Africa, by some measures, is now either the fastest or the 2nd fastest growing region in the world. So there's some bright spots. That said, it's probably a little too early to break out the champagne in the sense that there are still risks out there, mostly political and geopolitical. I mean, for example, the fiscal mischief, we'll say, in Washington could still derail the recovery. Europe, not out of the woods in the sense that we just had an Italian election. 2/3 of the electorate essentially said no to austerity. That's quite a signal. We've recently had a very flawed bailout for Cyprus, tiny economy, but the signal that has given to depositors, let's say, in Europe is bad. So there are lots of those kinds of risks, I would say, that are still out there. So we can't completely sort of rest easy, but the good news is there is some very good economic dynamics. The economic dynamics are a lot stronger now than they were a year ago.
Okay. And obviously there's been a fairly healthy run in commodities and materials over the last, I guess since the 4th quarter of last year. Do you think that's sustainable?
I think markets got a little ahead of themselves. They've come down a little in the last few weeks. I don't expect a lot of downside because we do expect global economy to pick up the pace of growth as the year progresses. So that will put some upward pressures on commodity prices, but I don't see another sort of boom-bust kind of situation. Certainly, I don't see a lot of movement upwards in the near term, although it'll gradually sort of drift up. But I also don't see a crash. So sort of moving sideways for a while and then drifting upward.
Okay. Let's move back to the U.S. economy. What's your expectations of in terms of growth rate this year?
Well, you have to factor in the sequester. Assuming the sequester stays in effect the whole year, then that could shave about 0.5% off growth in the U.S. So we were saying 2.1%. Now we'd be saying 1.5%, 1.6%. So even if it goes all the way through the year, that's the impact. So not good, but not horrible, not a recession by any stretch of the imagination. Now, if they come to some kind of agreement, let's say by June or July, then that impact will be that much smaller.
Okay.
And what's very important to say about the sequester is the impact is isolated on a few industries, aerospace, for example, being one of them, but also a limited region. It's basically the Beltway and a little bit outside it. Once you get past that and you get into other industries and other regions of the country, the impact will be almost sort of imperceptible, shall we say.
Great. Yeah, and 2 sectors I'd like to ask you about are automotive and housing, obviously very important for chemical makers, and we've seen some fairly robust growth in both sectors. What's your view on automotive and housing?
Well, there are 2 things going on here. One is the fundamentals for consumers are getting a lot better. Employment growth, income growth is starting to look decent. It's not as much as strong as we'd like it, but it's decent now. That's helping. Very importantly, household net worth is up, tremendously up. And you got home prices up, stock market up, and debt down. So that net worth is improved dramatically, and consumers notice that. They spend a little bit of that, and then so in that sense, the dynamics are great. Consumer finances are good, and so spending is actually beginning to look pretty good. But very importantly, something else is going on here, and this pent-up demand. A lot of households put off that decision to buy a car. They put off the decision to buy a home, and that pent-up demand is getting released as people feel better about where the economy's headed. So So we've got a lot of strong positives going for autos, which, as you said, rebounded strongly, and housing, which is coming along very nicely. We're starting to see numbers in housing, for example, that we haven't seen since 2007, and that's a really good sign.
Okay. Moving to China, which now accounts for 25% of global chemical demand. Talk a bit about what happened last year in China. You know, that had an impact on the industry and its growth rate, and what you're seeing in early 2013 so far.
Well, China was hit with a double whammy. On the one hand, you had a slowdown in exports because of the recession in Europe and a very slow growth in the US. On the other hand, the Chinese tried to deflate their housing bubble, and that hurt domestic demand, which is to say demand in consumer spending, housing, construction, and that kind of stuff. Now, both of those are starting to turn around. The global economy is starting to look better, so Chinese exports are picking up. And very importantly, the Chinese government backed off this sort of very sort of drastic curtailing of credit to the housing sector. So housing's starting to come back. And so if you think of it in those terms, China is starting to come back. But they've got some long-term issues, demographic issues, banking issues. So China, I don't think is going to go back to 10, 11% growth rate. I think the best you can hope for is about 8.5, maybe. So I think sort of the heyday of China, to some extent, may be over.
Okay. What about Latin America?
I think there again, lots of bright spots in Latin America. Mexico's doing very nicely. I think they're starting to tackle some of the structural problems. Chile's doing well, Colombia, Peru. The one big disappointment has been Brazil, which slowed down. It too was hit with this sort of double whammy of exports slowing and a credit crunch, but that too is turning around. Recent data suggests that Brazil's starting to come back, and that's really good news. There are obviously problem countries in Latin America. Venezuela's in big trouble. Argentina in big trouble. Ecuador in big trouble. So it's a bit of a split sort of continent there, but there are some really strong economies right now.
Okay. And I guess what are you seeing in India?
Well, India as well sort of slowed quite a bit over the last year for very similar reasons. But right now we're starting to see, for example, for the first time in 5 quarters, exports picking up in India. We're starting to see foreign direct investment coming into India after a sort of dry spell. And so all of that is really good news. So India's growth went all the way down to around 5%, but I think this year it has a shot at 6.5%.
Great. Thank you very much, Nariman.
Thanks,
and
Rob.
thank you for joining us. Again, Rob Westervelt with IHS Chemical Week at the World Petrochemical Conference. Thanks.